started right.
Good afternoon, everybody. Mark here at TapeTally.com for your Week 20 recap. This week we saw quite a bit of movement to the downside, which we were talking about over the last couple of months, that we were kind of expecting this with the momentum waning in the markets and a lot of the breakouts in individual stocks not following through. So we did kind of foresee this. The market was telling us this months ago. It just took a little bit longer than I had expected, but the market is what it is. It's basically 5% down throughout the indexes. S&P 500 and Dow Jones suffered a little bit less. Gold was basically flat, just up about 0.5%. Oil down 5%. Canadian markets down over 5%. And volatility obviously up 30%. Let's jump right into the... actually, my ratings for this week I'm going to maintain the same as last week, and you may be wondering to yourself, well, if we had such a horrendous week, why isn't this turning to bearish? Let me jump to the weekly time frame here, and we'll talk about it a little bit more. Oops. All right. So we're still stuck in this channel. Basically, it's that simple. This channel is quite wide. It's 3 years old as well. And I mean, one thing about channels is, if you want to learn more about them, this is a book that I read on them. I'll just pull this into the screen here. This is, I think I mentioned this before, but it's Far From Random by Richard Lehman, using investor behavior and trend analysis to forecast market movement. This book is quite good. It simplifies things. It talks about why we can't use fundamental analysis and analyst ratings, and gives you a simple and easy to follow way to analyze the markets using channels. So I use channels just basically to look at the broad picture, the long-term time frame. The way that I gauge underlying conditions is I look at individual stocks. So I like to see, for example, in mid-March, as we talked about, and if you go back through my posts, you'll see that a lot of the breakouts were starting to fail. And once I see that, and I start to see momentum waning from this kind of move we had early in the year, I don't trade stocks. So basically, since the middle of March, I have not been involved in individual stocks. I've been playing the VXX quite a bit, and the Junior Miners ETF, GDXJ, which I introduced a new strategy this week on it. It's not as good as the VXX strategy, but it's all right. The VXX one seems to be the best one on the ETFs so far that I employ. So I'll continue introducing different strategies and stuff. Basically, I want to find the best ones and introduce those to the members and the readers here. So, okay, yeah. So we're stuck, below the midpoint of this range. So I wouldn't call it necessarily a bearish on a long-term time frame, because this channel is quite wide. But it all depends. It's a bit subjective here. So if you want to start drawing, let's say trend lines, channel lines here, you want to basically try and capture all the data within a channel. That's the essence of it. So let's just take a look at that. So I mean, we can say here that it's at the bottom of the channel, so maybe it depends on how long you want to look back. So this is looking back basically, what, 8 or 9 months. So this channel right here is kind of still intact. I mean, we are coming towards the bottom, so we can expect maybe a pop here, and if it doesn't pop, then maybe we can expect a bounce off of this line here. And that's basically it. It's kind of an imperfect science, or an art, I guess you could say it. But I mean, well before this, if we look in mid-March, we saw that the momentum stocks were starting to fail. The breakouts in individual stocks were not starting to hold. So the market told us well in advance. So we shouldn't be surprised on it. And take a look at the Qs. Basically the same thing. A lot of this, I mean, this one has taken the largest hit, I think, over the last 3 weeks, and that's because it probably went up the most because of Apple, and Apple's got hit quite hard. So continue on through these. Take a look at gold. Last week we talked about it breaking this long-term trend line, and this week, well, it continued early in the week, and then it kind of bounced, which is kind of expected after you break a trend line. There's a lot of people watching this trend line break. So this could be a fake out. Like, who knows? Because there's so many people watching this. Gold is such a watched commodity that, I mean, this could definitely be a fake out, and we could just shoot higher here, or it may consolidate a bit more, come back, take out this high, and then continue lower. You just have to play it by ear. Gold continued downward. Gold, I kind of like this basing pattern. I mean, we talked about it breaking out here. I wasn't really too confident in that, and of course we did see that fail here. So I kind of like this basing pattern. I think that, you know, if we take out this low right here, people will start throwing in the towel and just give up on gold, which is probably the best time to get in. So we'll be watching that. Hopefully it has a little bit more downward movement here, and basically we want to see the towel thrown in, and, you know, investors saying that's it. I don't want to see oil anymore. I don't want to talk about it, anything. That's usually the best time to get in. Volatility, hard to see anything on the weekly time frame. We'll take a look at it on the daily. And I'm still neutral on this, and the one reason why is that, you know, if we draw this down, we talked about it breaking this downward trend line last week, but it has had quite a move here. We did capture a bit of that in our VXX strategy. If you go back on the page under performance, you'll see that. I also update the trades real time via Twitter, but I'm looking maybe more for a pullback here. Volatility is kind of hard to use technical analysis on and trend lines, but we did see a break here, and this was kind of from a rising bottom here, so it's moved quite a bit. I mean, it can go much higher if the market continues to tank here. We will definitely see the spike, but we'll see how that goes. And the Canadian markets, if we go back to the weekly time frame, you'll see here that we are bearish on this, and we've been for a couple of weeks now, and it continues downwards here. It looks like it's going to break this area here very, very soon, this level of support here. But maybe not. It'll bounce off of there. I mean, it's bounced off of there 1, 2, 3, 4. This could be a fifth time. Who knows? So let's bring up the daily chart on the S&P 500. So last Friday was right here, and we talked about the market being stuck in a range, and it may bounce off of here. Obviously, it did not. This week we saw basically 5 straight down days on increased volume, which is a good sign, actually, because that's a bit normal when you start seeing traders and investors, you know, hitting the sell button all at the same time. You'll see this huge increase in volume. This is not a huge increase, but you see, like this right here, that's some large volume here. We did start seeing increasing volume. So what could happen here is basically, I think we are going to see more downward movement here, but I don't think it'll be straight down. I think we may see a bit of a reflex rally here and just sort of pop back into this range, and then maybe kind of just grind lower. I'm not sure exactly what will happen, but that's kind of the indication that I'm getting here. Now, what would reverse my position from neutral to bearish is exactly that. So if it bounces back up here and then we see more strong selling, I would probably turn a lot more bearish. To be bullish, I'd have to see some consolidation and a breakout, probably to new highs above this top line here. So what else did I want to talk about today? The new strategy that I introduced this week is the Market Vectors Junior Gold Miners Index. So I use a proprietary set of indicators that developed over the years, and I've got from some other people actually as well. And what I do is I implement them in a system that I've back tested and forward tested with real money and paper trading and everything. And I played it quite a bit on the VXX, and it's done quite well for me over the last couple of years. And I started to implement it on the GDXJ here, and it's done quite quite well as well. It's not as good as the VXX, but it does okay. It has an EV of long term of above 1, so that's good. And it's a bit more volatile, but it does have the return. So I'll be playing that one probably with a little bit less risk until I become a lot more comfortable with it. I just started trading real money with it, so it's we'll see how that goes. I'll be updating that, of course, via Twitter as much as possible with the real-time trades. So that's basically it for this week. I just wanted to reiterate, kind of my neutral rating. Yes, we did see a large downward move in the market, but I'm expecting a bit of a move back up here, and we'll see how it goes. Have a great week and trade well.